today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 10 a.m. Eastern Time, 30 minutes in the trading day when we got markets floating right around flat territory. Off the lows we had last night, though. S&P's right now positive by a point, trading at 34.33. You got the NASDAQ NQ futures negative by 36, trading at 11,655. The Dow positive by 1 point, 28,135. The Russell positive by 10 points. That's more than 6%, 0.6% in the green, trading at 1613. Commodities, we got crude positive 60 cents at 40.66. Gold contract pulling back negative $25 at 19.04. Silver down 44 cents. And we'll jump over to the VIX volatility index right now, 28.60, pulling back from that 30 price point. We got the 10-year yield above 0.8%. And it is earnings season, folks. We got a lot going on. Tesla shares, Tesla pulling back from the open it had. It was up more than 2%. Excuse me. It was up more than $25. Now up just $8 for Tesla, up 2% right now on the day. We also had some earnings for Chipotle. Somehow my mic slipped off there. Let me say I was jumping around to Intel. We have earnings. And with that in mind, let's jump to Kevin Hinks of Fast Market. Folks, right after this show, Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network. Great time of year, setting up a lot of great potential trades in earnings season. Kevin Hinks, good morning.
Good morning, Tommy. Happy Thursday. How's everything going?
Happy Thursday.
Pretty muted start to the day here. I mean, of all things, the Russell is what's leading this market higher. Everything else, let's face it, Tommy, this market is sitting and it's waiting for something to happen on a stimulus package. And the market continues to get coiled up and frustrated. I thought the jobless claims number was exceptional today. It's very rare that you get a surprise by 100,000 jobs on a jobless claims number. So that's a pretty big jump. That 800,000 level was getting pretty stingy. So to break below that is pretty important. But I wish that mattered. There's a lot of microeconomic stories out there right now, Tommy, with individual names coming out with earnings. But from a macro perspective, we are sitting and we're waiting for some type of news on a stimulus package.
And it does seem like, Kevin, right? I mean, I have one of the headlines up here, Pelosi, Mnuchin, they're going to talk again Thursday. And the headline from Bloomberg, quote unquote, Senate skeptical. When does this happen? Now they're talking about maybe even happens the final vote after the election. But the deadline, if they want to get everything, it seems like it got pushed. Originally, it was Tuesday, right? 2 weeks out from the election. And now it seems like they need that exact language this week if they want to start voting on it next week. We have a debate tonight. We got an election in 12 days, and we got earnings season in full swing. It's, usually I kick off the program this morning. Like you said, so many headlines, stimulus driving a lot of it, the market looking for it. But jumping back to earnings, I know you guys are looking at all the equities this week. Of course, we got Tesla. Strong numbers from Tesla. Pulling back on the open, though. Now just up 1.7%, only $7 right now in the positive for Tesla. Of course, we have Chipotle. How about that move? Almost 1,000, more than 1,000 actually at one point on the open for Chipotle on their earnings.
Yeah, Chipotle, that stock has run a long way. And, Chipotle does such a good job. Ordering online, digital is such a big part of what they do, but looking at Chipotle now down almost $85, not really a surprise. Tommy. I mean, this stock has run a long way. It's up, what did I figure out since the first of the year? About 46%. I mean, these, even in the pandemic, this company has continued to grow. So it may have gotten a little ahead of itself in terms of just the stock price, but Chipotle doing extremely well. The long-term effects of this company, is still very bright. And when people look at that, at the name Chipotle, remember something. The outstanding shares in Chipotle are only 27, just under 28 million shares. That's almost none, basically. So when you look at a company like Chipotle, you say, how does it possibly trade $1,300? Well, look on your Thinkorswim platform and look at the opening shares in Chipotle, and then look at the opening shares of like any other fast food company like McDonald's. McDonald's has 744 million versus 28 million. I mean, and you realize the size of Chipotle and the size of McDonald's and how much Chipotle can still grow. And it's a lot.
Yeah, it's remarkable, man. And they had some strong numbers, like you said, and I've got it up there. They got 27,967,000, not even 28 million, Kevin.
Right. That is
pretty remarkable
in terms of float.
Pretty remarkable. And then you pull it down. I was trying to find it real quick. There we go. So McDonald's, 744 million shares for them available. And quite the run. When you put, we're just back. I just pulled it up for Chipotle. You're only back to where you were trading at on October 13th, so 9 days ago, in terms of the run that this has had from $415. And, of course, we had Tesla out as well. What are you guys talking about for the program today, coming up next?
Yeah, and the first section of the show, we're going to talk about American Express. They have earnings coming out. And then the feature stock of the day, Intel. Like Folio will do a look at Intel. And, obviously, when you look at Intel, it'll be that relationship with them and AMD, that adversarial relationship. And then we're going to finish off, have a little fun with some Sam Adams that has earnings coming out.
Nice. Sam Adams, nice little Northeast Boston little basing in there. Sam Adams Brewery, that story pretty interesting in terms of the company that they built, of course, and that whole sector with beer consumption. I just saw an article actually talking about like 12 days ago in terms of people drinking tendencies in general, right, down for people in lower age groups. And then, of course, you have all those hard spritzer water
Sure.
that have come into that.
Hard seltzer. Yeah.
Hard seltzer. Thank you. Constellation, one of the ones, right? Corona. I mean, the runs that some of these companies have had, it's good to be in the beer business, alcohol business in general, but some of those tastes kind of changing. Well, Kevin, we look forward to the program, man. Earnings season, always fun. We look forward to it. American Express, of course, Intel. And Intel, I mean, it is critical. They're right in the middle of that huge gap they had on their last earnings, right, where they kind of ceded the battle to AMD a little bit. So they'll have a lot to say, of course, on their numbers. And we look forward to the program, man.
All right, Tommy. Thanks very much for having me on.
Thanks, Kevin. Stay tuned, folks. We'll be coming back after the break. And don't forget, Fast Market, right after this hour, folks. Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network. Earnings season. You want to talk about defined risk? Setting up those option trades, no way better to learn than going through theoretical trades as they set them up, break them down, and manage those portfolios that they have over at the TD Ameritrade Network. Check it out after our program, and we'll be back after the break. We'll see what else we have going on. S&P's right now, flat, 34.32. NASDAQ in the negative, Dow in the negative as well. Stay tuned, folks. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the S&Ps minus 3 points right now at 34.29. You see the acceleration we had last night, 34.02. That acceleration at about 7:15, 7:30. We're looking at 5-minute bars here, so 7:35 p.m. Eastern time. Really, we got a drop from about a price point of 74.32. You trade down about 30 S&P points. We claw basically all back, and we're sitting right at that price level, right near the close we had yesterday. You back this out. I mean, this has been a chopping around trading range between about 34.20, the lower end, right? Lows there made Tuesday afternoon, Wednesday overnight. Not much further in terms of the lows we had on Monday towards the end of the day. You're down there at about 34.19, 34.11. Technically the low, and we're kind of bouncing around. I mean, the higher end, 3,500. That's where we were Friday, where the sell-off began right in the final hour of trading. You were trading at 3,500 on the dot. So we're still 70 S&P points below that price level of last Friday. All right, jumping around to some of the headlines. Weekly jobless claims. So that number, 787,000. There's a lot of ways to look at this number. To frame it, you could call it the lowest since March 14th. That's a positive, without a doubt. You put it on a graph, and there we are. And as Kevin Hinks mentioned, I mean, you're talking about almost 100,000 less than the market was looking for. Market was looking for 875,000 for the week. They come in at 787,000, 98,000 under what the market was expecting. I think the thing that always sticks out in terms of continuing claims, you see a drop there. The level of those getting benefits for at least 2 weeks dropped. 1.02 million to 8.37 million. Okay, so that's a good number as well. Continuing claims operate on a 1-week lag, so that's a 1-week older data point. Continuing claims, there it is on the chart in terms of what we're dealing with here. What they do get into, though, is that the previous record for weekly jobless claims was never even above 700,000. You're talking about the previous high ever, because things have taken a lot longer to accelerate to the downside. We've never seen such a steep literal drop off of a cliff. The previous high, 695,000 in 1982. Folks, that's 38 years ago. And since then, we have never hit a number above 695 until March. And since March, we've hit it every single week since then. It is approaching November. Today is October 22nd. You're going back to March. We've set a record every single week. And those are initial jobless claims. Quite a number to keep in mind. All right, getting into some of the earnings. So Chipotle, I mean, these are some strong numbers, but what you're going to see is you got a lot of strength already priced into a lot of these equities. You don't trade from a price point of the 400s to the price point of almost the 1400s without expecting dramatic growth in a big way. So you better deliver. Pre-COVID, we're at 900 and change. And you want to talk about a turnaround. I mean, this company, of course, they dealt with, it was at the salmonella, right? They had their outbreak. Looks like that began in about late 2015. Stock trades from almost $800 down to a low October of 17 of 200 and change. And since then, it's been a rocket ship, and you really just put things in. That's a 4-hour. We'll put it on a daily. And as I mentioned to Kevin, you're only trading back to where we were on this equity, October 13th. Okay, so the market just kind of pairing. They didn't crush it out of the park as you might have actually been possible. But look at what happened. Sales rose 14% in the quarter. Shift to delivery weighed on the profits. So this is a little bit of a profit story. It's also a story that they don't have an outlook. Okay, so they don't want to get pinned down on their outlook. There's a lot in flux. Earnings, 376 versus 347. Revenue just over at 1.6 billion. Third quarter net income, 80.2 million. That was down from 98 million. Or 347 a year earlier. Same-store sales growth, you're talking about 8.3% same-store sales growth. You see the dramatic dip they had in Q2. Second consecutive quarter, digital sales more than tripled. Digital sales could exceed 2.5 billion this year, more than double last year's total. Maybe the market was looking for more than that. The market probably wanted an outlook. That probably would have helped them. The company opened 44 restaurants, permanently closed 3. 26 of the new locations had Chipotle's drive-through lanes, which are for only picking up digital orders. So with that in mind, I mean, it's quite a drop-off, the volatility in some of these equities when it's traded that high, but also pretty interesting. The Analyze tab, you go over there, check out the fundamentals, as Kevin Hink stated. So this company, with their 27.9 million shares outstanding, you're talking about a market cap of $35 billion. As he mentioned, you jump over to McDonald's, I think we're dealing with 170 billion. Yeah, 169 billion. Their market cap, obviously a much bigger company, but Chipotle on the right direction. And you take a look at McDonald's. You want to talk about an uptrend. We're back above pre-COVID levels. It's been quite an acceleration from McDonald's, basically kind of consolidating over the last month since September 16th, sitting at about 227 for Mickey D's. All right, what else we got? Coca-Cola, earnings top estimates despite a 9% decline in revenue. I mean, you know, COVID hitting a lot of companies, Coca-Cola one of them. They topped the estimates for the third quarter earnings, but that's quite a decline in revenue. It's nice that they were able to cut their costs and beat on the earnings side, but they're in the middle of slimming its portfolio. So what they're going to do is, and they talked about this when the pandemic first hit, earnings per share 55 cents versus 46, revenue 8.6 billion, 8.65 versus 8.36. Quarterly sales, decent quarterly sales jump that they're dealing with. Net sales dropped 9% to 8.65 billion though. Organic sales fell 6%. All 4 of Coke's drink categories reported declines in unit case volume. Sparkling soft drinks was the least affected, with its volume falling only 1%. You had demand for Coke Zero Sugar. Coke drinks lifted the category. Juice, dairy, and plant-based drinks saw volume shrink by 6%. But guess what, folks? Coca-Cola, they did pull back, but you're up 1.6%. You see the acceleration to 51.61, currently trading at 50.83. You put that on the daily, and you know, some paired expectations. This is what you're seeing. A lot of companies. Keep in mind that when you're trading, still down $10 for Coke. Okay, there's some paired optimism in this company as the price is reflecting they're still dealing with some woes. When you're getting into a company like Chipotle, that's a rocket ship up to 12, $13.60 before they come out with earnings, you're almost priced to perfection. And many times, even with strong numbers like Chipotle put up, they don't have an outlook for the calendar year next year. I mean, look at what this company's done, and they haven't even provided an outlook for the calendar year next year, for 2020. That's a remarkable statement, but when you're getting 14% growth, you're getting same-store sales growth of 8% or something to that regard, 8.3. That's quite an acceleration for Chipotle. All right, what else we got? AT&T is out with their numbers. Talk about some troubled woes, but not today, up 5.6%. You see this chart. I mean, we were just coming down near the lows of 26.08. Yesterday, the close, what are we at? 26.72. But today, on their numbers, we'll get into them after the break, they added some decent subscribers, 600,000 plus subscribers they added. They're up 5.6% at 28.22. Jumping over to their competitor, Verizon, up 0.75% as well. Stay tuned, folks. We'll be right back after the break.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the market slipping a bit. Right now, you have the S&Ps pulling back. We're down 13 points. You see that little acceleration we had from 9:45. We're at 34.38. These are 15-minute bars, and I'll put it in a 5-minute, and you can see the drop we just had from 34.28. We're down 10 points. from where we were at 1020. Just in the last 10 minutes, the S&P is dropping a bit, 34.18 right now. Dow off 125, NASDAQ off 112, and the Russell barely hanging on to positive territory, up 1 point, but all the markets pulling back as they have. Jumping over to the VIX, seeing a little bit of a spike above 29 on the VIX. All right, jumping around to airlines. We have Southwest out with their numbers. They're up 2.6%. American with their numbers as well, down 1.5%. So Southwest in the positive. Jumping over to their numbers. Biggest ever loss. Not too surprising, right? When you have revenue drying up almost completely. How about almost a 70% drop in revenue? Revenue dropped 68% to $1.79 billion from $5.6 billion. The Dallas-based carrier lost $1.2 billion in the 3 months ended September 30th, compared with a $659 million profit the last year. Adjusting for one-time items, Southwest per share loss $1.99, better than what the market was looking for, though, $2.35. Revenue beating 1.79 versus 1.7. So that is Southwest trading higher, as we mentioned. LUV, there's your pop. And then on the flip side of that, American, how about $2.4 billion net loss? Cuts their cash burn, though. Furloughing 19,000 employees earlier this month. Their numbers, a loss of 554. The market was looking for a loss of 586. Revenue 3.17 versus 2.81. Trimmed its cash burn to about 44 million a day. Whew, that is quite a number. From 58 million in the previous 3 months, it expects that to go down to 25 to 30 million a day in the fourth quarter. Man, quite a number though, right? So you got American. They're down on that news with the market, though. They were actually positive briefly on the open, but down now about 1.6%. All right, what else we got going on? September home sales jumped 9.5%. Existing home sales jumped 9.5%. Prices are rising too fast, is the quote there, as supply remains tight. Inventory of home sales falling 19.2% annually to just 1.47 million homes for sale at the end of September. The current sales pace, that represents a 2.7-month supply, lowest since realtors began tracking that metric in 1982. I mean, you have a lot of funds coming in, just soaking up a lot of the supply, holding on to those properties, renting them out, even securitizing those properties, so they're able to get a lot of that capital back, even while maintaining ownership of them. Tight supply continues to push prices higher. The median price of an existing home sold in September, $311,800, a 14% gain, 14.8, almost a 15% gain from the median price compared with September of 2019. That's a new high for the series dating back to 1968, also an all-time high when adjusted for inflation. Strong numbers. I mean, you almost can't overstate how strong they are, but it could limit the opportunities for first-time buyers in the future. First-time buyers' share of the market fell to 31% in September from 33% in August. Tough to get in as a first-time buyer when you don't have any equity in a house that's appreciated at all, when the value of existing homes is going up 15% year over year, and you weren't able to appreciate any of that. But quite a number for the housing market. And, you know, where is it, right? Where is that growth? It's not everywhere, folks, all right? It's going to be centralized in some places for sure. We're biased in Florida. You know, my dad, Tom, he does a lot of real estate, and we're very fortunate in how this is all evolved, with people having the ability to work from home, to work remotely. More so, you think about it, right? Maybe families, they have the ability to work from home. Then you can move anywhere with your kids. Maybe your kids are homeschooling right now and you have the ability. A lot of people, that's happening. Parents are working from home, kids are homeschooling. Maybe say, why not we make the move? One example, the Hamptons real estate prices break records as New York City flee to the beach. They're not in the city, all right, because the city, it's not open like it has been. How about this, folks? Average sale price in the Hamptons soared 46% in the quarter to just over $2 million, according to a report. That comes as hundreds of thousands of New Yorkers, of course, flee the city. Home sales in Hamptons remain strong at all levels, from under $1 million to more than 20. People not in the city. They're going to the vacation homes. They don't need to be in the city. They're spending more to be out there, spending more time in their homes. Florida, we have quite a surplus, not surplus, an acceleration of people coming to Florida, of course. Low taxes, beautiful beaches, real estate market continuing to rock. All right, what else we got going on? I found this story interesting. Quibi. So this is the venture started by Jeffrey Katzenberg, Meg Whitman. Man, they had almost $2 billion in funding. I believe it was 1.75 billion with a B is what they raised. That service was going to be $4.99. It was until they wrapped it up. And they had investors here talking about Disney. Yes, investors including Disney, Comcast, NBC, Universal, and AT&T's Warner Media. Nothing like having, the biggest players out there as investors in your platform that you produce content with. Maybe they're able to distribute it. Nonetheless, you could only use this service on mobile. So it could not be used on TVs. And they were geared towards 5 to 10 minute clips. 10 minutes or less was their clip, geared towards a younger generation of people on the go. You have a few minutes here and there. Maybe you're waiting on the train. Maybe you're waiting in an office. Maybe you were just killing a few minutes. You have 5 to 10 minutes. They originally projected they would have more than 7 million subscribers after the first year, but they only came in at 500,000. To equate to things, right? You get Disney out there. Between Disney, Hulu, and ESPN, they're at 100 million subscribers. All right. And this company launched with $2 billion almost that they raised. I believe they gave back about $300 million of the $1.75 billion to investors as they wrapped it up instead of just burning through it. The technology that they were on, that was supposed to be part of the lure. The company faced a lawsuit almost right away, which claimed that Quibi violated their patent for mobile video technology. So they wrap it up. Quite a price tag that they put into there for sure, though. All right, wrapping it up, we'll take a look at Tesla shares. Tesla was higher, but as this market has slipped, Tesla's given back almost all of them. We made it back to a low today of about 426, which kept it in the positive, but barely. To see where we are still, this has just been chopping around. Pretty calm action. We've been at this price level for about the last 2 months, really. Call it August 24th. You traded up to a high of 425.80. We're sitting right now at 429.04 with a little bit of consolidation, and it would make sense. Post-split adjusted, you have a low on Tesla of, what's it going to be, March 18th. How about $70.10, and we're trading at $429.22. This market, I don't know. I don't know what it's thinking right now. It's down 14 points, a little dicey, a little bit of a sell-off. And we're only an hour and 8 minutes into the trading day. You get the S&Ps down 13 points, NASDAQ down 120, Dow off 114. Stay tuned, folks. We're going to come back. We'll take a look at Intel. They get earnings after the bell tonight. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We talked about American. We talked about Southwest, two of the biggest losses they've ever had out there for those airlines. Article out here, interesting, on Bloomberg, talking about you got 20 industry associations said in a letter Thursday that they are urging, airline and travel industry groups are urging top U.S. officials to develop standards for rapid testing and other measures to sidestep the growing quarantine restrictions imposed by states. And they talk about in this letter that the patchwork of rules is confusing and discourages travel. I would agree, right? We don't know what's going on, maybe state to state, where this pandemic is accelerating, decelerating, what the rules are. If you do travel in, do you have to quarantine in some fashion? And they talk about in here that if you have a federal leadership talking about rapid tests, contact tracing, and centralized risk assessments, said the letter to the heads of the Department of Health and Human Services and Homeland Security and Transportation, that could quell some of those fears and develop standards that they're asking for. And I would kind of agree. I would be much more open to traveling on a plane if I knew everyone was getting a rapid test that got on. Doesn't mean that somebody can't be positive and test negative, which happens sometimes up to 20% of the time, as in you get a negative, but you're early on in the stages, you're not quite emitting the cells yet to get yourself a positive test. You might get a negative, but it's a lot better than not testing anybody. And there's been really no federal leadership in terms of, so far the U.S. government has balked at other requests from the industry to perform temperature checks on passengers or to issue a requirement for wearing face masks. Folks, that's going to be the quickest way to get this economy back open, get people comfortable traveling. And as I mentioned that, we're seeing this S&P sell off. We're now down 23 points. We're down 0.7%. The Russell had been the leader. The Russell pulling back a solid 1% from where we were at early in the trading session. We're under 1,600. You're looking at the NASDAQ NQ futures, quite a sell-off. We just lost 200 points since the open in the last hour and 15 minutes in the NASDAQ. Jumping around to some of the FANG stocks, let's take a look where we are. Look at that drop from Microsoft. We just shaved $5 off the top. How about Tesla? We still positive by 0.5%. Tesla positive. We just dropped $25 in Tesla. Microsoft shares, as I mentioned, we get back about $5. Amazon shares down 1.9% right now. They're down almost $100 from where we were pre-market. Amazon down $60 on the session right now. Apple shares down 1.5%, dropping from 118 to 115. Google shares had been trading higher the last couple of days. Look at Google. Google holding up better than anything right now in the tech sector, down just 0.2% after charging higher the last 2 days after it's announced that they're going to be dealing with antitrust suits. Jumping around to some of the banks. JP Morgan, look at that pop, up 1.3% on the banks. Bank of America up 1.3% as well. And let's jump over commodities. Gold, everything kind of selling off right now. Gold under 1,900 at 1896. Silver down 75 cents right now. And I believe we got natural gas inventories. I didn't pull it up, but we get natural gas inventories at 10:30 in the morning. No real reaction. That's 10:30 on Thursdays. You do see a little volatility there on that number. Not sure what it came in at, but right now you have natural gas above $3. And you want to talk about a run, folks, this natural gas. Look at this chart. All right, from 180 a month ago to over $3. And even if you go earlier this month, October 2nd, you were trading at 240. You're trading at 302 in natural gas crude, just hovering. This 4105, we've been oscillating above and below this number since, which is remarkable, June 23rd. You're talking about 4 months of action. Now, we did have a little bit higher. We had a little bit lower. Crude made it down on that thrust lower to a price point of just above 36, but we're trading at $40.56. And we got to pull up Bitcoin. Quite the week Bitcoin is having. Yesterday, charges higher from 12,000, almost 13,000. But look at this chart. Pre-COVID, we're above 10. You go to 42.10. It's been a one-way trip with some volatility on both sides in the meantime. But that is quite a channel trend that this thing is trading higher. It might be nearing the upper end of that channel line. But nonetheless, you got Bitcoin at about 13,000. PayPal, they're going to start accepting cryptocurrency. You're going to start being able to use cryptocurrency to pay for things on PayPal. The market loving that idea yesterday. And you put this, I mean, pretty remarkable when you think. We go back to December of 2017. Can't believe we're almost talking about 3 years ago. All right, futures start trading. 3 years ago. Can't believe that's the case. Futures start trading on Bitcoin. For the first time, you were able to short the price of Bitcoin, and even better on an actual exchange like the CME. And what happens? Bitcoin trades from 20,650 in the span of 3 months. By February, you were trading at 6,000. But this high, we're going back. That high, 13,915, June of 2019. You're talking about almost a year and a half later, but we're coming up there. And we're challenging that high. The next level we're going to be, you're talking about July. We were at a price point of 13,480. And so far this month, we've made it to a high of 13,285. So coming right up there, I think of that nice cup and handle formation that our man Basil Chapman talks about so often. All right, jumping around to what else we got going on. Let's take a look at some of the other stocks. We'll take a look in the market. Starbucks shares. We'll zoom it back in. The monthlies of some of these equities, pretty remarkable. Starbucks shares lower about 0.5% today. We talked about Chipotle. See where they're wrapping up right now. Chipotle actually holding up, has not sold off. It is down 6%, but it's been down 6% so far for most of the morning open. McDonald's shares down about 0.5% right now. AT&T, check out that acceleration, up 6.3% on their numbers. Jumping over to AT&T shares. Quite the acceleration in terms of subscriber ads. Total revenue, $42.3 billion. Not bad. The market was looking for 41.6. The company added 645,000 net new phone subscribers during the quarter who pay a recurring monthly bill. Analysts were looking for them to lose 9,000. What is up with that? Quite a beat. Earnings per share, 76 cents, down from 94 cents a year earlier. Said the pandemic eroded 21 cents per share of earnings. AT&T spent the last few years investing to become a media business. Said it had 38 million subscribers in the U.S. for both its HBO and HBO Max, reaching its 2021 goal a year early. It currently has 57 million subscribers worldwide. Quite a player. AT&T, and you see the market reacting, up about 6.3% today with the market down in a big way. AT&T higher. Netflix shares down about 1.3% today with some of the tech stocks. We'll jump over to Disney in the world of streaming. Disney down about 0.4%, had been higher. Why not Amazon? They got a streaming platform, AMZN, trading lower 31.30 with the tech stocks. Had been as high as 33.99.66 last week before we're trailing off a bit. And we'll check back in on Tesla as we wrap up this break. Tesla barely up about 1% at 426.56. And as this market's selling off, that VIX above 29. I mean, there's so much going on, folks. We got the stimulus hanging in the wind. We have weekly jobless claims coming in at 700,000+. Would have been a record in any other year prior to 2020. All right, we got a presidential debate tonight. We got an election in 12 days. Get out there and vote. Whether you're voting by mail, voting early, we're fortunate in Florida, a lot of early voting available, or get out on election day. And wear a mask, social distance, be safe, and help get over this and open back up that economy. Stay tuned, folks. S&P is negative by 24. We're coming back in 3 minutes to finish up the show, and we'll take a look at that intel with earnings after the bell tonight.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps minus by 12 right now. Dow off 130. Dow off 72. The NASDAQ 100 off about 130. I'm going to jump over to Intel real quick. Intel shares down about 0.1% right now, 53.40. You see when you put it on a chart, the last earnings for Intel, not too kind, as they kind of ceded the way to AMD for leadership in the next set of chips. Couldn't really compete with them. The shares, I mean, you talk about trading out of bed from above 60, and it just kept going on a daily basis. First, you make it down to 59.98. Then the next day, you make it even lower than that. Within the span of 2 days, you're down to a low of 47.90, and you actually make a low there on July 31st of 46.97, down more than $13, down about 20% from where you were trading at on July 22nd. In terms of what the market will be looking for, the Analyze tab on the Thinkorswim platform, folks. If you haven't tried out the platform, hit the banner link on the front page of TFNN.com. Open a demo account. You'll be able to use all this stuff. So they got the earnings, a $2.91 move. That's what the market's pricing in. The earnings, they tell you when it's scheduled. You can even look quarter by quarter how they've been doing in terms of the actual versus the estimates for earnings per share. Then you look at the volatility implied versus historical. You can see in previous quarters where they actually come out, that historical, the volatility, where we're spiking, how that actually is reacting. And then, of course, you can get into the further economic data, the fundamentals. But really what I look at is what's the market priced in for a move? $2.91. Where's it getting that from? Basically what the cost is for an at-the-money put and a call expiring today. If you want to go out to Friday, a $3.13 move for Intel. That's what it's pricing in. That's just more than about a 5% move after the bell for Intel. Stay tuned, folks. We got Fast Market. They're coming up live next. They're going to be talking about American Express. They're going to be talking about Intel down that Thinkorswim platform. You can even watch Trader TV right in that platform. Or don't forget, check out the TFNN YouTube channel. Just search TFNN and subscribe.